Hello, I'm Dr. J, and this is the Volatility Sonar Report. The reason it's so important for you is this is like a heartbeat for the market, folks. It tells you whether or not we expect the market to go up higher dramatically or down lower dramatically. As VIX moves up, they're expecting dramatic moves. As VIX moves down, that means volatility is going to be more stable. The markets are going to be more stable. Here's today's report.
Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell with Group 1 Trading. Well, after Monday's huge down day, we've had a couple of small rallies, and we've actually seen a lot more interest in the VIX this week. Yesterday was a big volume day for the VIX with a lot of different strategies trading. Chris touched upon that April 40-50 iron butterfly. When the customer buys an iron butterfly, they're buying an they're buying the two out of the money options, a strangle, buying the 50 call, buying the 40 put, and they are selling the two at the monies. So when they do that, they are actually selling the iron fly, but synthetically they are buying the butterfly. It has the same profit and loss characteristics as a butterfly. So when that customer sold that iron fly for $4, buying the two outside, selling the two inside, they were synthetically buying the May 40-50 butterfly. Now we saw that same type of strategy today, only they just went outright and bought the fly. In June, they bought the June 40-50 fly. So they paid $1 for that, just like in May, where the price was $4 on the iron, synthetically $1 on the fly. So in both of these circumstances, the customer is buying the out-of-the-money options, selling the meat. So we've seen a lot of people offering those 45s the past couple days, just because a lot of our interest has been in the out-of-the-money options. Similarly, there was another trade in May, the May 45-55 call 1x2. The customer sold the 45, bought the two upside calls, the 55s. They sold that for 42.5 cents. So in all of our trading the last couple days, skew, or the volatilities, the differences in volatility between strikes has been steepening. Upside calls are always bid in the VIX, but they're especially bid these last couple days because of the paper we've been seeing. In addition to what I mentioned, there was also a buyer of the May 70 calls, so that steepens the skew that much more. So a lot more trading in the VIX, a lot more action, and people are selling at the money options, buying upside options, so our skew is steepening. Higher volatilities for higher dollar strikes, people assigning a higher probability of us reaching those very high levels that we haven't seen in weeks. Jamie Tyrrell, Group 1 with Option Monster.